If we were having this conversation a month ago, I'd be slightly less buoyant because we actually have a monthly survey of our clients. And last month in September, we hit, or beginning of October rather, we hit the record low. And we've been taking this sentiment index since 1995. And this is the worst that investors have ever felt about the market outlook. This month, things are a bit more buoyant. You've started to see things like gas prices come down over the last month, the beginnings of what look potentially like deals between Russia and Ukraine to get grain out of the country, and indeed central bank taking action and to sort of control inflation and the political turmoil in the UK as well, also beginning to have some resolution. So all of those things have acted together that actually investors are feeling a little bit more optimistic. However, what does a little bit more optimistic look like? It means the fact that they are still very much in cash. We've seen record amounts of money come onto our cash platform into fixed interest products and indeed into money market funds. We have money market funds as the most sold funds on our platform for the first time in over 10 years. But in that mix, now that we're seeing sentiment slightly improve alongside cash, we are also seeing some tentative steps back into markets which look undervalued. So that is the UK, that is Asia, but they are extremely tentative because, as we all know, there's still a huge amount of sort of negative economic sentiment going into 2023. So this, I think, is much more about a kind of rebalancing rather than a kind of risk-on sentiment.
Yeah, Emma, a lot of what you've been saying is stunningly cautious as well. Do you think we're going back down?
Yeah, I have to say, this has been a fantastic month and there have been some really positive indicators. I do think in particular the Russia-Ukraine deals are really one to watch in terms of the almost immediate impact that could have on inflation and indeed economic sentiment. But ultimately, it's not just Ukraine-Russia war which has had an impact on central banks and on markets. Not that long ago, we were in the depths of COVID, and the amount of debt that a number of nations had to take on in order to get people and businesses through COVID has had a lasting impact. I mean, they're very much, all indicators are suggesting that we will be going into recession next year. And that may mean that inflation comes down, but it will also mean negative things for fixed income and for equities. I mean, all in all, 2023 does not look like it's going to be a positive year for markets, for consumers and for businesses.
Those growth stocks that you and Juliana were talking about just now, which are leading the rally in Asia, leading the rally in Hong Kong, will inevitably, I guess, lead the rally, perhaps if there's a change of sentiment in US especially as well. But the valuations still matter as much, because suddenly we all started looking at the valuations of these tech companies and saying, not quite really seeing the cash flow and the underlying profits in order to justify it. Are valuations, are we going to start ignoring them again on this rally, or actually do they still matter?
I think they do still matter. The thing with growth stocks is everything is always relative, right? So even when a growth stock is looking cheap, it's never looking cheap compared to, a value stock. This rally, I imagine, is just a bit of a bump. There's always that sort of flushing out where you get a bit of positive sentiment on a sector that has been so kept down by the negative sentiment in China. And indeed, if you remember coming into the beginning of this year, when we started to see some concerns about the US economy, we saw that significant sell-off in US stocks in January, which sort of now pales into comparison with what we saw in March with the Russia-Ukraine war. But growth stocks are very much sensitive to economic sentiment, and with the economic outlook looking very clouded, I don't expect this to be a prolonged rally for growth stocks.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.